You're listening to the Multifamily Mentor Show.
My name is Terrance Doyle.
And I'm Chris Lopez. You probably know us from the BiggerPockets Real Estate Ride Along Show. Well, now we're talking everything multifamily. We bring in top industry experts from around the country to come join us in our Denver studio for an in-depth, in-person conversation.
We're going to be diving deep into deals, underwriting, raising capital, and everything in between. Join the conversation. What's going on, everybody? Here with Kimberly, my co-host Chris Lopez. We just finished in the studio, had an amazing interview, so I hope that you guys check that out. And now we're in the field. We're in an area of Denver called Cherry Creek. And so Kimberly is going to walk through what she looks like when she's in a neighborhood, how she analyzes the people, the other buildings, some of the organization of the structures, and we're just going to learn from her on what she looks for when she's in a neighborhood. So Kimberly, what would you do if you're in this neighborhood? There's obviously a lot of growth going on. There's a cool apartment building here. What would you be looking for if you were going to buy in this neighborhood?
Yeah, so I'd pull up Redfin, Zillow on my phone just to kind of check out what the single families are like. And around here, I pulled it up already. It's like multi-million dollars. Like the cheapest thing I saw was like a block down for like $8.99. So I already know, okay, there's a lot of like, it's good, solid residential neighborhood. You got dogs out here, children walking, nicer cars parked in the street, got a Lexus, an Audi. So those are all things I'm kind of looking at here. So, this is definitely an area I would consider for sure.
So when you see like children out, when you see a lot of cars like parked on the street, what does that tell you about the neighborhood and like maybe who your tenant class would be and maybe what the rents would be? What are the indicators that gives you when you see these kind of details? Yeah,
to me, so I'm from the Midwest, but even if I'm in an area that I don't know here in Denver, when you're seeing $1 million, multi-million dollar homes, you're in an A-class place. So you know that it's going to be way less headaches of tenants. They're going to be good, responsible tenants. People can park in the street. That means there's not people racing down the street in their car. In Indy where I invest, some places you would not want to park a nice car in the street at all. You look a block down, there's a new development going on there. So you know that there's money that is here that is still developing and growing in an area like this. So if you buy here that your value is going to continue to go up and grow.
Good stuff. So I think one of the cool things that I've learned from Kimberly in the last couple days that we've been talking about this is she really goes off of her feel and gets boots on the ground in the neighborhood. One of the things I've never done is like pull up Redfin or Zillow to see home values. I thought that was a really interesting point that you brought up is like, hey, what are the value of the homes? And then what is that going to tell me about the resident and maybe the rent that they're going to pay per square foot? Also looking at the kind of cars that are parked. I thought that was an interesting point. I think subconsciously sometimes when I'm coming to the neighborhood, maybe I'm looking at that, but like you were able to really quickly say Lexus, BMW, Porsche, whatever, and know what kind of cars are in the neighborhood. And that tells you it's obviously safe to park on the street. And clearly this is an area where a lot of these people are visiting, hanging out. So an area that you could feel comfortable putting your money into. So Chris, what do you say? Let's walk down here and let's see what else we find and tips we figure out from the neighborhood.
Great, let's go.
All right, so as you're walking, where do your eyes go? What do you look for? Because we have no spreadsheet here, so what do you do?
Yeah, so streets seem really well maintained. There's not any potholes, just awesome. Looks like they were all recently kind of redone. Yeah, so the city puts money towards this area if they're, redoing streets. You don't have to, there's dumpsters here, there's not trash laying all over the place right here.
That's a great point.
Everyone's yard is pretty well maintained. Trees are trimmed, so when you're walking in the sidewalk, you're not dodging branches and stuff. Even look at this alley, completely clear alley. Even no potholes in the alley. That's amazing.
Yeah, some of these things you're pointing out are great. They're kind of like does, but they're things that people need to take note of.
Yeah.
You know what I mean?
So for me in a new area though, I don't know this area. Yeah. So people might be like, oh duh, it's this
No,
location.
what I mean by duh is these are great things that most people probably just look at and subconsciously are like, oh yeah, no potholes here and here. But to point them out so people that don't automatically pick that up can actually look for it.
Sure, 100%. Yeah, so look right here, you got a new development. 2-3 stories tall. Renderings look really nice. A-class for sure. Oh, what's his name? Chico. Aw, hi Chico. Oh.
Smell some other dogs in there, huh, buddy?
Have a good day.
You didn't wave.
I know, but same thing, I was like, oh.
I want to see the waves. So.
Hi, cute
I want to see the
dog.
technique.
Hello, sir. But see, that's an example of something I would do. Just like give it like, oh, like I like your shoes. They're cute dog. Like, oh, super friendly. Picking up his poops, carrying a bag of poop. You know, so you know it's a good area. They don't leave poop around.
All right, so we're walking and talking, and I think this is the first deal analysis we've done with no spreadsheet in front of us, which is definitely a newer thing for me. And so when you look at properties like this, or areas like this, I should say, how do you look at things in context with a spreadsheet as well, or without a spreadsheet?
Yeah, 100%. Obviously, the spreadsheet has to make sense. I mean, the numbers have to somewhat line up. But for me, you know, you see streets that have like no potholes, pretty well maintained yards. You have a job site right here that's relatively clean job site, new development. So nice cars driving by, friendly people. So those are all things I look for in an area that's like, okay, hey, you know, people, the city cares about this area. It's well kept. You have, you know, tenants and residents that care about the neighborhood as well that are going to keep it up and make it look nice. And so you know that it's going to be a lower cap area. I mean, very A class, but you know that it's going to be really low headache, low maintenance type of property, so your money will be safe for sure.
Yeah, so you've never been to this neighborhood before in Denver?
No, never.
So it's brand new. Kind of like, what's your impression and what's the high level on how it translates into like a spreadsheet and pro formas and cap rates?
Yeah, so like I said, you would really expect it to be a lower cap rate for sure. I mean, like, you know, 4 to 6 caps, you know, and you know, just with how beautiful this area is, I mean, that would definitely be expected, but.
So piggybacking off of what we talked about earlier today in the studio was, you know, you're trading out of a deal that is probably a higher cap rate, so higher cash on cash, but the downside is the tenant class is a lot more work, a lot messier, and you're probably a lot more hands-on, which means your quality of life and how passive the investment is not there. Whereas if you come here in an area like this, that are all around the country, every city has a neighborhood like this, you're going to be paying more money, you're gonna get less cash on cash, but what you're gonna get is better quality of life and probably a higher class of resident, which is gonna mean it's much more passive.
Exactly, and I think that's something to be said. I mean, it all depends on your goal. If you're okay with something more hands-on, because you want those aggressive returns, you know, that's totally fine. But for someone like me at this point, my time is the most important thing. And so, you know, having residents that care about the neighborhood, they're responsible, you know, they have good jobs, and, you know, there's not going to be any crime or, you know, riffraff in the middle of the night type of thing. You know, that's definitely something to consider as well.
Yeah, so some of the things that we pointed out that Kimberly was showing us was, you know, she's looking at the streets, seeing if there's potholes. She's looking at the alleyways. Is there a bunch of trash? Is there potholes in the alleys? How do people take care of their yards and the trees, right? And how much development is going on, right? Because that's a sign of money's coming in there, people care about their property, and they're putting a lot of money. And when people put money, they put attention, right? And so the more attention there is, that means it's gonna be more comfortable, less crime, and just a probably more attractive, enjoyable place to live. So these are all the things that I think Kimberly's done a great job of getting away from necessarily just looking at Excel and putting her feet on the ground and trying to get to know an area and really immersing herself in the neighborhood, which is not something that you hear a lot about.
Yeah, 100%.
So kudos to you, I love it.
Yeah, thanks.
All right, let's keep walking. So Kimberly, one of the things that we were talking about off camera was another value of actually walking the site, immersing yourself in the neighborhood is you look at an Excel spreadsheet or an OM that a broker sends you or that you create, and then you can go on site and really validate or poke holes in what the numbers tell you.
Yeah, 100%. So it can go either way, you know. On the pro forma, you can say, okay, I'm going to bump rents to this number. And then you might come to the area and it might be a really bad area. And it's like, oh, I don't know if I can really hit those numbers anymore. Or on the flip, in an area like this, where the numbers on the spreadsheet might not look that great, like, oh, these are pretty low returns. But then you get here and it's such a beautiful area. You got development, $3 million homes behind us. Then it's like, okay, I would be way okay with not that great of a return because you know that your money's super safe. You could probably bump rents higher than what's in there now. And you know, it's going to be really great, low maintenance, you know, A-class building.
Totally. And just a story to validate what you're saying is true is that in this neighborhood, I was doing a deal and I looked at the OM and our Excel spreadsheet and I was like, there's no way this deal is going to make sense because these numbers, we can't hit them because the entry purchase price was way too high. And then I actually walked the neighborhood, did rent comps, and I was like, wait, we can actually get 20% more than what the broker thinks you can get. So we're actually getting a great deal. So I love, you know, one of the things about multifamily and residential real estate in general is that it's based on the micro neighborhood. Right? There can be an area where rent comps are a certain number, but until you walk that actual street, you don't really know what it's going to be. It's based on like a 2 or 3 block radius, not a mile radius like most banks comp properties for, or rent comp. A lot of people comp rents based on like a 6 to 12 block radius, but really it's based on like 1, 2, or 3, based on what the micro neighborhood is. I think that's a big misconception that you only find when you walk the neighborhood.
Yeah.
So do you always walk all the properties? Like you get an OM, a broker sends you over something. Like what's your litmus test to review that, then go walk the neighborhood? Or do you walk everything?
I walk everything.
Really?
Yeah, I walk everything because I want to know what I'm going to feel about the deal before I actually go diving into all this underwriting. Because if I get there and I'm not really feeling it, I don't really feel that great about the building and the location, there's no reason to dive into this underwriting and go down that rabbit hole.
So you walk it first before diving?
Yeah,
wow,
I go there,
okay.
I park, I like talk to everyone, I like see what's going on, and I'm like, all right, I like this, I feel good about this, I feel like you can do X, Y, Z, because you know the purchase price, you know, but then, and you know the unit counts, and it's like, okay, here's what I'm predicting without knowing anything else about the deal. Then if I like it, then I'll go dive into the numbers and say, okay, what do I think based on what I see?
And that's fascinating because I always would do it in reverse order.
Really?
But you do, yeah. I mean, I guess most people are taught is spreadsheet first, analysis first, but you're walking the property first and boots on the ground.
Yeah, I got to see it. I got to see it first. And that's why I get a lot of deals that people pass because they'll see it and be like, oh, nope, like right away. And I'm like, well, hold on, let me go see first. You know, is there a reason that people are passing on this, you know, or whatever the case may be. And so I've gotten a lot of my deals that way.
So you don't have like a thorough mental checklist you're going through on places? I mean, as you walk and you're pointing out stuff, you're talking to pretty much every person walking by here. Do you have like a detailed mental checklist? All just you do your thing, it's all feeling based?
I think it's a little bit of both because obviously, you know, there's certain things you can't change and there's certain things that you can. And so the things that you can change are all about the building. You know, if it's like the building itself and like the rents of the condition of the building and this and that you can have complete control over. But if you're surrounded by all this stuff and you don't see any money allocated to a neighborhood like this from the city, you don't see any development, you don't see any growth, there's not necessarily new homes or people moving out, moving back in. If it's just kind of stagnant, you kind of know that like, okay, you can make this building beautiful, but nobody's going to want to come here because of what the situation is, right? So I think it all just depends. A little bit of both.
Love it.
Yeah.
I love what you're doing. I love the strategy. I think it's very thoughtful and it's counterintuitive to what most people do, which what Chris said, and a lot of the people that we meet with is they're so focused on the spreadsheets, they get so into the weeds that they forget to actually go walk the neighborhood, check it out, and see what they're actually buying. And so I love that. One final question is, how many hours would you say that you spend in a neighborhood before you buy a deal?
That's a tough question for me because I'm always in these neighborhoods anyways. So it's like a deal I just walked by, it was like a 48 unit in Indianapolis. I'm like, oh, this is the same stoplight that I've been passing for the last 2.5 years. And I'm like, oh, I didn't even realize there was a building back there. So I already kind of know. So it's not like I'm venturing out into a new neighborhood very often in Indy because I pretty much stay where I know super well because I know a lot about the residential, the people, the city allocations, all that type of stuff. So it's tough to say exactly.
But on average, what would your advice be to a newbie when they're gonna buy a multifamily deal? Like how many hours do you think they should be spending getting to know the neighborhood, the people, the streets, you know, the safety?
Yeah, as long as it takes for you to feel confident about it. Like, you know, I spent time in a coffee shop earlier. Okay, there was like a lot of people working on, you know, like new businesses, new development, like all this type of stuff. So I feel like, okay, like spend an afternoon here after like, you know, what was it, 4 hours here? I'm like, okay, I have a pretty good understanding of the neighborhood. So it's like, okay, maybe that's sufficient. But if I'm like, you know, if blocks are different, like this block is different than that block, and then this is, you know, then you might have to take a little bit more time. But I think it really just depends. This seems like an area that's way more sophisticated. It's good. Like, you know, this is A class. It's not A class over here, C class over there. It's pretty consistent.
Yep, cool.
So, yeah.
Well, great stuff. I learned a ton. I think the audience is going to love this. So nice work.
Yeah,
Give me a
thanks.
pound. Nice work. What's going on, everybody? Terrance Doyle. I have a very special guest here, Brandon Kaufman, who's one of the top multifamily brokers in the Denver market. A little tidbit about Brandon, former NFL player, college athlete, Division I athlete from Denver, knew the market, played professional sports, and then wanted to get into real estate. And over the last 4 or 5 years has solidified himself as one of the top guys in town. So with Kimberly, our guest on the Multifamily Mentor Show today, we wanted to get together to talk about what are some key things to discuss with brokers when you're trying to get them to motivate, get them motivated, align interest, and get them to bring you deals. And when you're young like us, you're looking for value add, like disproportionately risk adjusted, good deals. Okay. So that's the stage of the conversation. And Brandon, welcome to the show, my friend.
Thanks for having me.
Yeah, absolutely. Excited to have you. So Kimberly, talk about a little bit of your transition from residential to commercial and some of the conversations and the things that you've done to go deep and build strong relationships with brokers that bring you deals.
Yeah, for sure. So I think definitely knowing what type of property you're comfortable with in Indy makes a big difference. So I made it very clear that, like you said, I was okay with a little bit of a rougher territory, rougher building. It was a C class. And I was willing to deal with that to get a higher return as my first property. So when I was talking to my broker, I was saying, hey, this is how much money I'm going to have. I had just sold off a residential property and I was going to put 100% of those funds into this commercial deal. C class, I was looking for 50 units and under. And, obviously a little bit of value add, meat on the bone there to bump rents, renovate some units, and just was really clear with what I was looking for with the broker.
So two things I got from what you said was that you were very clear about what you were looking for, right? Is you were specific. It wasn't vague, hey, I want a 6 cap or I want a deal, right? You're very specific. The other thing was you identified how much money you had, right? Because I think when I've talked to brokers, they want to know, okay, what's your price point? Where should I be looking? Maybe it's not even where I specialize. Maybe you're looking for 2 million and under and I'm really 10 million and over, right? And so being clear about what you're looking for in the investment, and number 2, being specific about how much money. So Brandon, when you meet with new people, how valuable is it to have someone that's specific about the amount of money and the kind of deal they're looking for?
Yeah, I mean, clear goals and returns is really important. I think, just like anything, you're selling yourself as much as an interview between, you're interviewing the broker. Is this someone I want to work with? The broker's interviewing you. Is this someone I'm going to spend time on, and give them whatever good deal comes across. So I guess just, having the ability to be flexible in those goals, being able to, not being extremely rigid. So being able to work around some things because a broker only has, 5, 6, 7, 8 deals, compared to the 100 that are trading in the market. So being open, and yeah, just, acting quick, yes, no's, giving them really quick feedback.
Okay, so I love what you said there. So expand a little bit on being flexible, because I think a lot of people that are listening to the show are new to investing and are really excited to do a deal, but they have this kind of strict guideline that they heard from a guru that are only touch deals that are 6 cap or better with rents in these kind of areas and blah, 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 right? So they have these strict guidelines. So when you say be flexible, give us some examples and help add some color to some things that because some of the deals that we've done, right, wouldn't fit in anybody's underwriting. People would have looked at them and been I can't believe Terrance is doing that deal. And then we made 82% or whatever, you know what I mean? So some of the best deals don't fit inside of a box, but give some examples for new investors out there, what you mean when you say they need to be able to be flexible.
Sure. I think just like any time you're hiring anyone, you're hiring someone of expertise and then putting a lot of trust in them.
Right.
So, if a broker is very excited about a deal, there's a reason. And so it's worth digging in if a broker tells you hey, you really should be digging in here. Whether it's, an area that you weren't privy to or didn't quite have an understanding or comfort in, whether it's maybe a lower return, maybe it's an unproven market, the first 2 deals you and I did, there weren't sales on the back end, but it was, I had called owners all around there and they're hey, I wouldn't sell for less than this. So the market was set and it was a phantom market, no real sales comps there, maybe even some no rental comps because, your style or someone's style is maybe better than what the current market is. So you can't be hey, there's a comp down the street for $1,350, but I think you can get $1,500 because of your style. So I guess just, trusting that if a broker gives you advice, then, believe in it. So you brought up some incredible points that I think we need to hammer home. And the first one is that there may not be rental comps or sales comps to support it, right? So one of the first things people say is,
well, how do I underwrite this? Because there's no comps. So I can't, like if I'm buying it at 100, let's say in Denver, 150,000 a door, and you're telling me the back end is 230, but the only comp I see is 160. Like, how can I underwrite that? And this is a lot of what you see in the markets that are growing very quickly, right? And so one of the things in the first deal that we did maybe 4 or 5 years ago was it was in an area town that no one had sold. But the thing that I loved about what you just said is that you had called those owners, right? You had called the owners and said, I have an offer for 180. Now I won't sell for that. I have an offer at 190. I won't sell for that. And I think the number back then was 210 a door. They were like, I need to be over 210 a door to sell. So even though nothing had officially traded, you actually knew what the market was before it was the market, right? And the same thing, and the same message applies to rent comps, right? Is that if you're going into a market where no one has actually turned units and done construction, and the rents are only 1,200, but the broker's telling you, hey, the rents are that could be 1,500 based on the level of construction, then you can trust that, right? Even though it may not actually be on Zillow or apartments.com. And so those are two of the things that you did extremely well when we were starting out, because let's face it, in Austin, Nashville, Dallas, Denver, San Diego, and all these hot markets, like the only way to get a deal is if you're going into an area where there are no comps on the sales or the rent. And so you're kind of having to prove it. And that's what you and I have done, like over the last 5 years in Denver. And that's what people getting started are most likely going to have to do, right? Is that if you're starting out, you can't go to the hottest market that where all the comps are set and get a deal. It's not realistic. You're going to have to go to a location that may not be as proven. And the way to prove it, which is what, brokers need to be able to prove to you, is even if it's not a sale that's closed, is what would an owner take? And then you can use that as a comp, right? Which is a great nuance that most people don't think about, is even if it hasn't traded yet, what would people transact at? And that you can use that as a sales comp.
Sure. Or just like understanding, like what kind of offers are flying around.
Right.
Just because a deal didn't sell doesn't mean that we didn't get 3-4 offers to that owner at a certain price. And so what buyers are looking at. You have a pulse of the buying market for sure.
Yeah, that's great. Kimberly, any thoughts on any of that?
Yeah, I would say just as the buyer side, working with a broker, especially a new broker, trying to convey that to your broker, like, hey, like, I trust you, like, I will close if you bring me a deal that meets my general criteria of what I'm looking for in a deal. Like, hey, if you tell me this, yep, I take your word. All right, let's put it in and let's do this now. Like, submit the LOI. Let's just get this under contract, because that's a deal. And obviously there's like not many great deals around. And so just proving to your broker, like, all right, you know what? I trust you. And like, if you say this, all right, let's go, and don't waste too much time thinking about it, going back and forth and, I don't know, is this actually good? Or,
And it doesn't have to be blind trust or anything like that. Like, it's definitely an interview process in the sense of I'm not just going to start letting offers fly just because I met you for coffee, but
exactly.
We'll have multiple follow-up conversations and, general discussions about real estate and, hopefully connect in that sense.
And I think like anything else, trust is built over time, and it's built over having like a natural like relationship, and I think that any great broker client relationship is built over time. It's built with trust that's been verified, right? I mean, no one, like, even though I trusted you and I knew that you were really good, I still wanted to verify. So I would drive by those buildings. I would maybe go and do like a secret shopper and see why the rents were so low. And what I found was like, yeah, these bathrooms aren't renovated, the hallways smell, and that's why the rents are $1,200. And that's why I think I can get $1,400, right? And so I think you got to verify. It's a lot of money. There's a lot of risk, but having a relationship with someone that you trust is key. The other thing we talked about yesterday that I want to bring up is, when you're starting out, calling the senior broker at a firm maybe isn't the right move, right? Maybe it's calling someone junior and you guys are going to build your career together, right? And so Kimberly, I think you have a great story of that. And so let's talk a little bit about that, because, Brandon brought up a great point of, you got to do a lot of deals and do great deals. You got to be with someone where you guys are both at the same point in your career, right? So a new investor starting out is not really going to be able to call you or anybody that's 5 or 10 years into their career that already has a great buyer's list. You got to find someone that's in the same point of their career and they can grow together. So talk a little bit about your experience with that and how you've been able to grow with your broker in Indianapolis.
Yeah, exactly. So it was pretty much the same thing. Like we kind of met each other when we were both at the beginning of our careers, but we were both like hustlers, heads down, and we knew that about one another. And so, as, I would observe his business, he would observe my business like independently at first. And then we were like, hey, like you're really good at this. Hey, I'm really good at this. Like, all right, and so then we kind of started to like build it from there. And as my goals were changing, his goals were also changing. And so it's like, where do we fall in real estate? There's so many different places to go as far as an investor, a broker, and so when I was more focused on commercial, he also just happened to be focusing on commercial. So it's like, okay, our goals were really aligning. It's not like one of us was like, oh, well, since you're doing this, I guess I'll do this too. It was like, no, we both had the mutual passion and we saw that. And so we kind of like took advantage of that and then started building upon that. And so I transitioned from luxury residential builds to then first C-class multifamily commercial deals, and now more towards B and A class, which is more hands-off, which is what we talked about before. But so just really going deep with one person and building that trust, building that relationship, and not going so wide. And, that's how I've been able to get all of my deals from my broker in Indy.
I love it. What do you think about that?
Yeah, I think that young brokers are like craving direction, like craving a job in a way. So if a young broker is given an opportunity to go hunt for something like very defined and like a clear path to a check, because checks don't come often in commercial real estate, then like they will do everything they can, knowing if like, if you can execute, right, and they do X, Y, and Z, they have this path to a check, and also, you're growing with the client and a forever client moving forward.
Right.
So.
Yeah. That's one of the things I love about the brokerage business is that it's really a partnership. Even though it's not an official partnership, like the better job that brokers do for their clients, then they're only going to get that back in new business and in listings, right? Because the more, the better deals that they find, they appreciate faster, they're able to refinance or sell them and then trade up into larger deals. And so it's just kind of like this self-perpetuating cycle that starts to gain a ton of momentum, and which is something you and I have been able to do, you've been able to do with other clients from California. And it's something that I've seen other brokers be able to do with other buyers as well when they do a good job. And then there's a flip side of that is when they don't do a good job, like clients and brokers can go separate ways and not have, not grow their businesses. So what is anything else you guys want to talk about this subject? I think we touched on some great topics with trust, being flexible, like some nuances on underwriting deals and how to find some off-market deals, on ways to go deeper with your broker. Any final thoughts?
I think we pretty much hit them all.
We hit them all.
Yeah.
Any thoughts from you?
No, I just think, like building that relationship, broker growing their career by learning through investor growing their career by learning the market, finding good deals through their broker. It's definitely mutually beneficial.
Totally. Yeah, having like very close broker relationships has completely made my career. I've seen it make a bunch of my friends' careers. And, it's one of those things where you want to always be looking out for like, how can I help them? And knowing that they're going to have your back. And I wouldn't be where I'm at without close relationships like we've had. I know, Kimberly, you feel the same way about your broker contacts. And, that's just the world of real estate. You have to have very like close, real relationships with brokers if you want to grow your investment career. So Kimberly, how can our audience get in touch with you?
Yeah, absolutely. Anyone can send me an email at kim@reddoorrenovation.com, or you can follow me on Instagram at Kimberly Marie 920.
And Brandon Kaufman, you're very busy, but how can people that are listening to this show, maybe they want to get into Denver, maybe they want to trade out of some things in some other markets, get into Denver, how can they get in touch with you?
Yeah, just speed. So the quickest way is a phone call. So my number is 303-547-7357.
Great. And we'll put those numbers in the show notes. Thank you so much for watching. I hope that you're able to get some valuable lessons and some takeaways on how to grow your broker relationships.
Everyone, thanks for watching this episode. We had a blast filming with Kimberly, lots of great content. Let us know how you like the new format, new ideas, new things that you want to learn about. But most importantly, give us some love. Hit the like button, subscribe, and leave a comment. We do watch those and we do reply to those. We'll see you next week. You're listening to the Multifamily Mentor Show.
Join the conversation.